Welcome back, everybody, into another review. In this case, we're going to review the setups that I've been highlighting and been missing from the end of November until now, the middle of December. And as I was talking about doing this morning update, I wanted to really have a dig down into the statistics of my setups. I mean, in other words, my question was, okay, what is the best management? What are the best characteristics of my setups? Not about the actual when to enter the trigger or anything about that. It's just what the best trade management that I could possibly have as per the statistic that I have so far. So I'm just now thinking that I'm not being using the actual trades that I took, not so many, I would say, but yeah, anyway, so let's get into it. So as you can see over here, I've been writing down in this Excel file all the various setups that I saw without this, with the session, what kind of setup was that, if the reducing the stop loss at around 4 pips was a good idea or not, if a TP at 7.5 pips was good, if with TP 7.5 pips placing the stop loss at break even at 5 was good, TP at 10, which is the basic one, break even at 5 pips with the TP at 10, is it good, or am I missing out on too many trades? And TP at 15 or TP at 15 with break even at 10. The results are quite shocking because I did not expect that, and I'm glad that I did also the session because it will make a nice and quite a big difference. As you can see over here, TPS 7.5 is the 3-to-1 because remember that my stop loss is 2.5 pips, so it's a overall in theory 3-to-1, but of course when I win, this is based on a 0.5 lots. When I win is 31 euro, when I lose it's 14. So if you have to divide, if you want to divide 31.27 divided by 14.27, you can see that it's actually a little bit more than 2. That's because in such a small lot size, such a small pip size, the commission, which is 3 euros per round trip with a 0.5 lots, I mean, it's a 6 euro per lot. On a small TP like that, it's quite big, and it's affecting very much the risk to reward ratio. And so this data is at 7.5 pips. That's I think it's around 10%. Yeah, because it's 3 euro out of 34, so it's a little bit less than 10% on a 45 TP. 45 euro TP is a little bit less and less and less. Of course, if I had a big stop loss, if I was trading intraday, the commission would be absolutely basically irrelevant. So as you can see here, I also had not just knowing about the pips, but actually the real results, because this would be the monetary amount that I will win and the monetary amount that I will lose, because it's I wanted to see if with the effect, how the commission would affect the real trading results, not just the theoretical one. So without further ado, let's go back. So you see multiple trades, some of them with the 15 pips. I would have not been able to take them because 10 pip, if you have like this move, maybe you can get a 10 pip over there, and so you are able to get maybe this setup. So you get this one and you get this one. But if you're only waiting for 15 pips, maybe you get this one, but this one not, because your TP is about there, so you will miss out on that trade. So that's what I was sometimes seeing, because the trend, the market was trending, so I was taking this one, then it will move, but I would have not been able to take. Hold on. Okay. when I'm not being able to take the second one. So on a 10 pip TP, I enter over here and I get out over there. I enter over here and I get out over there. On a instead it's a 15 pip, I get out again in over here. The TP is over there, so I will not be able to take both of them. Remember that this is just theoretical, because of course it depends if I can enter. And yeah, so the results are very, very important. So this is based on 83 trades. So this is 83 trades so far. Don't think that is too accurate. I didn't miss my entries. I did miss, of course, a huge something that I have to say is this one. All of these trades are, these are not just every single trade. This is a very, very specific question that I made myself. There is basically no losing trade overall. Even the smallest one, the one that has losses, at least is at break even. Only this one, a couple of them are actual loss with all the setups. That's because I will lose a little bit less if I had my smallest stop loss, how I correct it, which is, of course, I should not be doing it. I will not do that anymore, of course. But overall, you will see that most of the actual, basically all of the trades, at least they go to break even, they go to 5 pips and go back to 0. That's the least thing that can happen as per these condition, as per these trades situation that I have been looking for. So let's go down, because I had to make this introduction because it's very, very important. It's not like, this is not to count the win rate, this is not to count anything. Okay, so these are the last 83 trades, opportunity that I saw that will go at least to break even or to win. And so 83 overall, as per pip size, you can see that the TP10 is the best, even better than, slightly better than the TP10 with the break even at 5 pips. So if I was just looking at this, I would be saying that, okay, I should remove the rule that at 5 pips, I will place the stop loss at break even. But if we go on the right hand side and we look at the actual net euro of these for the same trades, you can see that the best one is actually the TP10 with the break even at 5 pips. Because of course, I don't know if it's for the commission, I don't know for what, but anyway, as per actual net euro, this is actually better. Then if we are looking at, I don't know if there's anything wrong, maybe I can check and maybe not. So if we now dive in and dissect and see, during the morning, what does it mean? It means that I was looking at trades from pre-London, London, late London. So that's why I call it the morning, because it's actually the morning from like 8:30. This of course is at 9. The late were like 11:30 Central European time. Okay. So these are the stats, and you can see that actually in these settings, the TP 7.5 is actually the best one as per pip-wise and as per net euro. You can see that is giving I think like 100, more than 100 euros to all the other ones. So you can see that this is clear, because of course you have to see that the total trades in London were like 1/3 of the New York ones, and they were like 1/4 of the overall trades. So it's the sample size is not that big, but you can see that it tells us something, that during London, pre-London, not always the price is already moving that much. And that is especially due to, okay, do we have news? Do we have a report? Do we not have a report? So the market condition during the morning session are very, very important. Remember that this is about Euro USD. Euro, USD. So in this pair, the USD is still very, very, very relevant. This one has a bigger impact on the pair than the simple euro. Euro, yes, has, of course, its own impact, but is mostly the USD. That's because if the day we're waiting for the CPI on the USD, maybe during the morning is not moving that much because we are waiting for the USD move. So that's just something to know. And it's very interesting. I didn't expect that. The 7.5 pips would be the best during the morning. During the afternoon, which is of course now we can see it's New York. And I define late New York as after 16 set 10 a.m. New York is after 2. Okay. Okay, so these are basically the settings that I'm talking about since I'm living in Europe. Okay, these are the time zones. You can see, of course, that we have many more trades, and the actual movement, the pip size, of course, the pip is different. We can see that during this time, the best trade management rule is TP 15 pips with the break even when it reaches 10 pips. It's not that different. You can see the difference is not that big between each ones. You can see also here in net euro, you can see that TP 15 pips is still better than TP 10, but it's not that much of a difference. I mean, we're talking about between 1650 and 17.7. This here is another euro more, yes, but the comparison between these and two are not that much. So, of course, the first hindsight that I saw is that how bad overall the TP15 was. Looking at the stretch of around 80 trades, I really thought that it was good, but that's because there are a lot of times that you lose instead of having a break even, instead of even winning, because sometimes the price will go to 10 pips, then will pull back. So now we are going to the final considerations, I would say. So we are seeing the sum of the best, and these are these are of course the best conditions, so the best of the best. So as per this sample size, if I had to maximize, I would have to take 7.5 pips doing London without the break-even rule, and doing New York 15 TP with the break-even at 10 pips. A great rule would be that I would use 10 pips with the break-even rule doing London and without doing New York. But you can see how the difference between the good enough is the most simple and is the one that I'm using right now. But simply not touching the stop loss before it reaches 10 pips and just letting it go. If it goes to 5 pips, I know that most of the time that it goes to 5 pips, it will help me avoid a loss if it retraces all the way back down. So you can see that yes, this is not the best, especially doing London. You can see that the monetary is not good, but also I think it's a good enough balance since I want to trade both doing London and New York. And so of course this I will stick to this. Okay. So I will stick to that just for the sake of simplicity. And as I showed you this morning, I mean the trades can be absolutely hugely profitable already with these setups, with these settings. And I really, okay, if I will gather more evidence and I will gather more experience about the fact that maybe 15 pips during London during New York is absolutely great, and 10 pips during London is not good, then I will probably adapt. I can also simply choose that I will not trade London, I will just trade New York and with the 15 pip, but that's about with the experience. I can also do a transition with, for example, I can also probably calculate from this if I take 80% at 10 pip and I'll let the rest run either to break even or either to 15 pips. In that case, I will I'll set the most of this thing, and I can probably even calculate it right now, and because all the times that it doesn't go, yeah, as you can see, it goes to 10 pips, it doesn't go to 15, and it retraces to 0. So let's just quickly look at how many times, how often does this happen. So where it goes to 10 pip, okay, goes to 10 pip, and then it does not reach. How is this a 0? Okay, it doesn't go to 15, so it goes all the way back down. In all these cases, if we were to calculate this, of course, this one, of course, you can see that the difference is quite huge. But if, for example, I take 42.69 times 0.8 is 34.15. 0.15. This is the 80%. 80%. And for how many are these? These are 16 times. So these are 16 times where at least, and then goes back to break even. This is when it goes back to break even. So 20% of the time I have to pay for the 20% of the position, then it's a minus, I don't know, 3 times 0.2, that's a 0.6 of commission, because you are, of course, you're only paying on the 20% of the position. So this is the sum. This is 33.55. So if I were to change 33.55 to all these, okay, let's see how it changes. Wow, you can see the big of the difference that it makes. It's a huge difference. It's now suddenly becoming more profitable. If I have this change, just simply taking out 80% at 10 pips and let the rest run. And what I'm not doing yet is this one, when it then goes to 0, goes to 15. So it goes to 10 and it goes to 15. Of course, in this case, I'm losing a little bit more than losing some profits, because now only, instead of 65, I'm reaching 34 plus the 20% of this that goes to TP. So let me just do this. Okay, so in the case that it goes into profit, we have this one plus 42.69 times 0.2, 8.5. So you can see that this sum, no, now, exactly, because now I have to see 20% of this. Okay, so it's a 0.2 times 65.84. It's 13.1. Okay. 13.1. Okay, it's a 13.1, which is 47.2. You can see that this one is bigger than the simple 10 pips, of course. So all these times that the price actually, for example, like this, why is this one like this? I don't know. Okay. 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 Yeah. So that should be okay. And if every time that I have this one, instead it would be less. So I don't know if the difference, you can see how much the difference it is. I think that this difference is way bigger than the gains that we had before. So yes, as you can see, that would be absolutely, if we count overall the missed profits and the miss anything, then if that's the case, it's not profitable. Okay, so let me just, okay, two, perfect. So this one was the original one. Okay, yes, so overall, if you see, with these settings is actually the worst. We're going to see with the next sample size, with a bigger sample size, we might see that overall the difference over here with the TP at 15 pips without even a break even or nothing is making profitable. But so far I would prefer to have a slightly higher win rate with a 10 pip TP rather than just waiting more and more and probably miss out on the trade. So far, as you can see, as per simple perception, is not that simple. Especially I can adapt and use a 10 pip TP doing London and a 15 doing New York. Yes. Let's see. Will be 10 pip doing London and a 15 pip doing, yeah, it will be number 2. It will be great. So I will think about that. This is something that I will think about. Okay, so I hope you guys enjoyed, and I'll see you next time.